Hello everyone. Let us continue the part 2 of time of supply under GST under section 12. In this we will be dealing just with respect to goods. The time of supply faces 4 types of different situations like forward charge, reverse charge, voucher method and residual cases. Let us discuss each and every point in detail. For understanding the time of supply of goods under forward charge, you have to identify the time limits. So, you need to find out the date of issue of invoice if the invoice is issued timely by the supplier, or the last date on which he should have issued the invoice as per section 31. Section 31 deals with tax invoices and we will be discussing this section in detail in the present module. Or the date on which supplier receives payment with respect to supply. There is a possibility that the seller makes payment even before the invoice is issued. So, in any of these situations, if you have all these 3 data, you will find out the earlier of the following dates and that will become the time of supply of goods. Provided that where the supplier of taxable goods receives an amount up to rupees 1000 in excess of the amount indicated in the tax invoice, the time of supply to the extent of such excess shall at the option of said supplier be the date of issue of invoice in respect of such excess amount. So, this concept is only if the invoice do not contain the entire value and the rest amount which you have collected from the customer is of rupees 1000 or more. The date on which supplier receives payment with respect to supply. So, what this point is talking about? It is talking about the previous point, the third condition, the date on which supplier receives payment with respect to supply. For that, you need to check these 2 dates, A and B, and whichever is earlier will become the date of supply. The date on which supplier receives the payment. So, the formula is the date on which payment is entered in books of accounts or the amount is credited in bank account, whichever is earlier. It will become the date on which supplier receives the payment. So, let us understand the entire concept through an example. For example, Mr. X sold goods to Mr. Y worth rupees 1 lakh. The invoice was issued on 15th January. So, the date of issue of invoice, let us go back to the first PPT, the date of issue of invoice by the supplier. So, the date of issue of invoice by the supplier becomes 15th January. Our second limit was last date on which he is required to issue under section 31 or he receives payment. Let us go back to the question. The payment was received on 31st January. So, this is our third limit. The goods were supplied on 20th January. So, 20th January becomes the last date on which invoice should have been issued. So, now we have 3 dates. The date of issue of invoice is 15th January. The last date on which invoice should have been issued is 20th January and the date on which supplier receives payment is 31st January. So, whichever is earlier, it becomes 15th January. Thus, the time of supply is 15th January. I hope you must have understood the entire concept through this example. For this, I have used the icai.org images for explaining you this concept. You can read it at later point. Now, let us discuss the second concept of reverse charge. Again, it has the same type of formula and you have to find out whichever is earlier. First limit is date of receipt of goods. So, it is a reverse charge. Under reverse charge, the supplier is not liable to deposit the tax liability to the government. It is the customer or the receiver of goods or the recipient who is liable to deposit. So, the first limit is date of receipt of goods from the recipient point of view. The second limit is date of payment as entered in books of accounts of recipient or the date on which payment is debited from their bank account, whichever is earlier. This is the same formula which we used earlier in the forward charge. And the last limit is 30 days from the date of issue of invoice of goods. So, once an invoice is issued by the seller, whichever is earlier, within that time limit, you are required to deposit the amount to the government. So, whichever is earlier again becomes the formula, and it is the date up to which invoice should have been issued and the tax should have been deposited. Provided that where it is not possible to determine the time of supply under the above clauses, the time of supply shall be the date of entry in the books of accounts of the recipient of the supply. So, the date on which you entered in your books of accounts will become the date. Again, you can refer this chart. Next, understanding the time of supply of goods under voucher method. In the case of supply of vouchers by a supplier, so what they are talking about, what this voucher method is all about. Voucher says that if you did some shopping from any store and on making payment, they gave you some vouchers which could be used for shopping again at the same store at a future date. So, that they are called the vouchers. So, if vouchers are supplied by supplier, so what will be the date of supply of voucher? The first point is date of issue of voucher is if supplier is identifiable. So, the date which is mentioned on voucher will become the date of supply or issue of voucher date. In all other cases, date of redemption of voucher where the details of supplier is not available. So, whenever you redeem that voucher, that will become the date of supply. The next one, again for that you can refer this example. The next one is understanding the time of supply of goods under residual cases. Residual, where above clauses are not applicable, for that you will check this last method. Where determination of time of supply is not possible by the above provisions, then time of supply shall be in all cases, in cases where periodical return has to be filed, that is where periodical returns are filed by the seller, it shall be the date of such return. And in all other cases where periodical returns are not filed, the date on which tax is actually paid to the government, that will become the time of supply of goods. The time of supply, to the extent it relates to an addition in the value of supply, by way of interest, late fee or penalty for delayed payment of any consideration, shall be the date on which supplier receives such addition in value. So, what this point is telling you, that if you have sold something and if the customer makes delay in making payment, so the seller charges some interest or penalty on the amount. Finally, he will receive the principal along with that late fee or penalty amount. So, the date on which supplier receives such additional amount of interest or penalty will be considered as time of supply for that interest portion. That is, addition in value by way of interest, late fee, penalty for delayed payment of consideration of goods, then time of supply shall be the date on which the supplier receives such addition in value. So, by this we have discussed all the 4 clauses, the 4 important clauses under the goods under section 12. In the next module, we will be discussing about the section 31, on the basis of which this forward charge is actually dependent on. So, you can go through this module, it will act as a reference for your future modules. Thank you.